All right, we're back and over to Andy Cruz to get us started today.
Thanks, Cashin. Once again, my name is Andy Cruz, and I am the program specialist with the National Training Center, which is here today to give you a quick introduction to our last webinar in the Building Financial Management Capacity across the CAA webinar series. Thank you guys very much for all of you, for all the participants who've attended all three webinars. My hat's off to you. I think you guys will certainly get a lot out of this last webinar. And today we're going to be covering budget revisions and reports. And with that, I'll hand it over to Allison Maloof. But before I do that, I did want to remind you guys that we still have the pre and post test up so that you guys may take that online. After this webinar, we'll go ahead and send out a link to it if you'd like to take it online. And so go ahead and feel free to do that. I'll be getting results out to you guys most likely by COB next Tuesday. So with that being said, I'll go ahead and hand it over to Allison now, so she can introduce the rest of the presenters and get started with the webinar.
Hi, everybody. Welcome back if you were with us for the first two webinars. And if you were just able to make this one, then welcome. My name is Allison Maloof, as Andy said. I am Associate General Counsel at Community Action Program Legal Services, CAP Law, in Boston, Massachusetts. We hope that most of you were able to join us for the first two webinars of this series. And as Andy mentioned, if you weren't, they are recorded, so we recommend that you go back and listen to those. We will be referring to them throughout this webinar today. CAP Law and the partnership have worked together on this series, which is intended to help increase the financial and management capacity across your community action agency. Here with me today to conclude our exploration of the themes that we've been discussing is our key members of the management team of Washington-Morgan County Community Action Agency in Ohio. I have with me Jerry Spencer, the Chief Financial Officer, Don Rao, the Director of Planning and Development, and Carrie McNamee, the Director of Senior and Community Services. Now they are, as I've mentioned in the last two webinars, are camera shy. So when they are speaking, you will not see their heads like you are seeing my head at the moment, but what you will see is the logo for their Community Action Agency. I want to reiterate what Cashin was saying regarding taking the polling questions. They are very important. These questions are intended to help give us a more in-depth understanding of your organization's practices and procedures. They also help us to emphasize key concepts throughout the webinar. So please participate in those when they pop up on your screen. So as we've been saying, this is the last webinar of a webinar series. Just to briefly give you an overview of what we've been talking about up till this point, we've focused on webinar one on the roles and responsibilities of key team players in preparing, monitoring, and reporting on a program budget. In this last webinar, we're going to focus on the reporting aspect and revising part of that budget. In the first webinar, we went into pretty good detail regarding the roles and responsibilities of the Chief Financial Officer in that process, the Program Director, and the Planning Director. We also started to touch on how to create a realistic budget proposal, and we carried through with that in webinar 2, and then talked about taking that realistic budget proposal, the line items, the budget categories, and turning those into a final budget that you would submit to your funder, and then taking that final budget and turning it into a tracking budget as a way to keep up with costs. And we talked about how each of the team members are involved in that whole entire process. We're going to conclude the series, as Andy mentioned today, with talking about the process and the procedures for budget revisions, how the team would approach those, and also budget reports, how you would prepare those for the different stakeholders that you might be dealing with in relation to a funding source. As with webinars 1 and 2, we are going to be following a funding scenario that Washington-Morgan County experienced. We hope that by using this funding scenario, it will help to give a practical perspective to the concepts that we are conveying throughout this series. We want to make sure that everybody is learning something, that they're getting something out of this time that they're spending with us. We know that it is time that's taken away from everyone's really busy schedules. On this slide, we have listed what we hope will be the key takeaways for everyone. We're going to look at, again, budget revisions, in particular the legal requirements. We're going to see how you would determine if and when a funding source will permit you to submit a budget revision. We're going to look at what the funding source might require and under what circumstances you would be allowed to submit a revision. We're going to look at things like what is the process for submitting a budget revision, and then we're going to talk some about no-cost extensions, what they might mean for your organization if you have to apply for one, and then also how you might handle a budget deficit that might arise in your program budget. And then lastly, we're going to close out this series by talking about budget reports, the different elements of those, how you would prepare them for the different audiences that you would be submitting them to, and we're going to have some samples to show you as we walk through that. All right, and with that, I want to hand it over to Jerry, Don, and Carrie to give us a recap on our scenario that we are using throughout the 3 webinars.
Hello, this is Dawn Rao. The sample program that we have been using throughout this webinar series is the HUD Homeless Prevention and Rapid Rehousing Program. This was a new program that was funded through the Recovery Act. In our instance, the state of Ohio was the grantee, and they allocated the funds to the local community action agencies and asked them to apply for the funding. The Homeless Prevention Rapid Rehousing Program focused on 2 target populations. The first was for those that were facing homelessness in the homeless prevention category, and then those individuals who were actually experiencing homeless under the Rapid Rehousing Program. To recap the webinar series that we've done so far, in the first webinar, we spent time discussing the approach the team members used to decide whether or not the HPRP program was the right fit for our organization. We discussed the different roles each team member plays in developing the grant, as well as some in-depth processes the CFO undergoes when determining the financial capacity of the organization. And in the second webinar, we discussed how the program budget was created for HPRP, including specific requirements that shape the different budget categories, the line items, and the ways in which the team worked together to monitor the program budget once it was put into place. And that moves us on to the what's next and the proposal and tracking budgets. And in this webinar, we will focus on how we revised the HPRP budget pursuant to variations that arose from our program director and CFO tracking the budget categories. And we will also discuss the reports that may be issued to the different stakeholders regarding our program. Back to you, Allison.
Great, thanks. So we're going to start off our discussion of budget revisions by talking about what triggers typically a budget revision. Revisions often arise out of certain changes in a budget that were not initially anticipated. Typically, these changes will involve not realizing things such as how much staff time is going to be required, how much personnel you'll need. They also may be triggered by not fully grasping the extent of the certain needs that you are trying to address with that funding. And so when these changes arise, what's really most important about these changes is that the CAA team discuss them. And then after they've discussed them, that they have some plan in place as to how they're going to address the changes. Because oftentimes budget revisions may result in budget deficits or surpluses. And if it's a deficit, we're going to talk a little bit later on, just a couple more slides about how you would go about handling that. If it's a surplus, you're going to look at how you would move that funding around, which is what we're going to talk about with the HPRP example. Jerry and Carrie, would you guys like to add anything to that?
Yes, Allison. Just to recap what Allison said, it is very important to watch for the typical triggers in budget revisions. And in most situations, it will be the program director who will notice these deficits in some of the line items and some of the potential surpluses in others. And by the time it gets to the finance department, they're already incurred. So again, it is important for the program director to recognize those costs before they actually make it to the finance department. So one recommendation we have for a way to be proactive about potential budget deficits or surpluses is to always reforecast your salary and budget spending rates for the remaining term of the grant when the line item reaches 80% of the budgeted amount. So in the case of HPRP program, what was more critical to forecast was the amount of money being spent on housing. So while the budget revisions are driven by the program directors, budget revisions are a team effort and require a close working relationship between the finance department and program director. The finance department must make the information available readily and rapidly. The budget tracking reports that you saw in webinar 2 are used not only for tracking expenditures, but the need to forecast the future recommendations. Back to you, Allison.
All right, so we want to know some information from you guys. So does your community action agency require its program directors to know the legal requirements for budget revisions? So if you could take a moment to answer that, it'll help us understand kind of where everybody's coming from today.
All right, that poll is open on that right side panel. See that many of you have gotten started on getting an answer in. We do appreciate your participation, and there's about 15 seconds left to get those answers in. All right, the poll is officially closed. We will be able to display results for you in just a moment.
Great. We've been spending a lot of time throughout each of these webinars discussing the different requirements that the team members need to be aware of and how important it is that each of the team members be trained in these requirements. All right, so this is an interesting response. So most of you guys in your CA do have your program directors get familiar with the legal requirements for budget revisions. And this is really important, as Carrie and Jerry were saying in the prior slides, and as you'll see as we move forward, it really is the program director who's going to play a crucial role in the budget revision process if a request is necessary, because they're the ones who are working most intimately at that ground level with the program. We sort of have seen the role of the program director as being summed up in kind of 4 key ways. One is that the program director would need to be familiar, as noted in that polling question, with the rules and requirements of the funding source. They would also need to be involved in nurturing and maintaining the relationship with the funding source. That is so important because that is what's going to set the groundwork, the foundation for communicating these budget revisions and requests. And there needs to be regular communication with the funders. And the program director is in the best position, is one of the team members who's in the best position to do that because, again, they're working intimately with this program, so they really know the ins and outs of it. Also, the program director needs to be very familiar with the process. A budget revision is not something that you want to surprise your team or just to kind of come up from behind and you're like, oh my goodness, we're almost at the end and our money's kind of a mess. Everyone needs to know what the process is, and the program director will most likely be the person in your CA who's going to follow through with that process, know what lead time is required and what other requirements might need to be met. Carrie, do you have anything to add to that?
Again, this is Carrie with Community Action. And as Allison said in the slide, there are 4 key components in the budget revision, and they are summed up in those 4 key ways. I have to make sure that I, as a program director, am fluent in requirements that govern a budget revision. I have to work with my planning director, and I have to keep abreast of the changes and achievements that we have, specifically with the HPRP program that we're talking about here today. And in order for this process to work, there has to be a good working relationship between the finance and program director. Back to you, Allison.
So when we're talking about the budget revision requirements, it's really very similar to the other areas that we've talked about in Webinars 1 and Webinars 2 as to where you need to look in order to find those requirements. And these are just key pieces of information that all team members need to be familiar with, and as you can see, we keep referring back to them. It's the funding opportunity notice or request for proposal, whatever it might be in your scenario. It's the grant agreement, whatever the applicable cost principles and administrative requirements might be. In this particular scenario and for this webinar, we're going to be focusing, as we did on Webinars 1 and 2, on OMB Circular A110 and OMB Circular A122, the Uniform Administrative Requirements and the Federal Cost Principles. And that's because, again, that's what's applicable in this scenario, but also all community action agencies are required to work with those circulars. Now, what's important to note is that you might get some funding from another source that's not federal that has their own requirements, or there might be a federal source that has variations that it wants you to follow on those federal requirements. So it's really important that you understand what exactly those requirements are. And then last but not least are just the funding source statute, their regulations and their policies. It's very important that all team members, but particularly the program director, when we're talking about budget revisions, be familiar with these different areas in which the requirements might lie. Now, when you're looking at those requirements, how do you think about them? How do you approach them? That's what this slide is trying to convey. The information you're trying to get from those requirements is what, if any, process am I supposed to follow? Is there any approval required? When is that approval required? And most importantly, what provisions what revisions am I going to be permitted to submit? Am I going to be able to move money in between very detailed specific line item categories, or can I only move money around in the big categories, or what are my limitations? Carrie, do you have anything to add to that?
Well, I just wanted to say that you'll see in the following slides and here in our future discussions that Washington Morgan Community Action attempted to answer the key questions in regards to the HPRP program when we were working on the budget revision.
So here is the budget requirement the budget revision requirement that applies to the HPRP program. And we put this up here just so you guys can see what Washington Morgan was dealing with. Again, this is from OMB Circular A110, HUD, Housing and Urban Development, the federal agency with which the funds were initiated. Their codification of OMB Circular A110, which is 24 CFR Part 84. Now, these funds, as was mentioned in the scenario recap, went through the state, and the state then allocated those funds out. So I'm going to let Jerry and Carrie talk about the process they went through with the HPRP program.
This is Jerry. The budget revision requirements for the HPRP program were somewhat atypical because the grant agreement was between the state and HUD, and then the state internally allocated those resources among its sub-grantees. And then as those sub-grantees spent the line items that had excesses or deficits, then the state moved that money amount around internally. So the grant was treated as part of a larger grant between the state and HUD, so that the state maintained the flexibility. So consequently, we were not dealing with budget revisions for smaller amounts. Since we said earlier these were ERA funds or Recovery Act funds, the state's goal was that these funds serve people quickly who had been had their housing impacted during these very difficult economic times. So until the subgrantees in the state had some experience about what the needs and the demands really were going to be, the state was very flexible in terms of how frequently they would accept budget revisions and how rapidly they would process those revisions. So as we stated in one of the earlier webinars, the HPRP program was designed to be a 3-year funding program. And some CAAs might take appointments in order to ensure that those funds lasted 3 years so that they could cover the staff costs. Particularly if you go out and hire somebody to do a 3-year project, you don't want to finish the grant in a year. However, we choose not to take appointments and just spend that money over a 3-year period. We choose to move quickly and serve people as they came in for assistance. And the result of that was we then received another grant that helped provide short-term or gap funding until the next funding cycle. So there was benefit to us in serving clients and in helping the state meet their goal of serving people quickly. Allison?
Great, thanks, Jerry. I just also want to point out that, on these slides are when, in relation to this particular program, the state might require a subgrantee to request prior approval or report a budget deviation, and a lot of the sub-bullets here are not that unusual in relation to other types of programs as to when approval for a budget request might be required, such as when the scope or objectives of the program are changing, if a key person has changed, if additional funding is needed. And also on this slide, you can see there are some more requirements that came from the funding source, such as if how you treat the costs are changing, if you're moving some costs from direct to indirect costs. Also, the requirement references other requirements that might require prior approval that the subgrantee and grantee would need to be familiar with. And then if you're transferring funding in relation to specific categories, so that's another area that sometimes requires prior approval or reporting when you're doing budget revisions. Or if you're entering into a contract or subgranting or contracting work out and you haven't described those actions in your initial grant proposal or as part of your grant agreement, then that would be a reason why you might need to get prior approval if you're having to move money around to do that. All right, so just to let you guys know where we are in our webinar today, we have started to talk about budget revisions. We have talked about legal requirements, how important it is for all team members to know about the legal requirements, and an example of how those legal requirements might apply. Now we're going to turn to the process. So here's another polling question for everyone. Does your community action agency, your CAA, have an established process in place to address budget revisions? Now, I realize kind of after the fact that this question might seem or might be a little misleading when I say established. We're not necessarily saying that you have to have some kind of written document, but you do need to have some type of, we are curious as to whether or not you have some type of process as to when a revision might be necessary in relation to a program budget. So take a minute to answer that question, if you would.
And this poll is open. You do have about 12 more seconds to get answers, and many of you have already gotten started. All right, the poll is officially closed. We will be able to share our results momentarily.
All right, that's good news, very good news. So it looks like everyone has some type of process in place for when a budget revision might be required in relation to a program. Those of you who don't, then you'll get some even more information regarding that out of this webinar. So sometimes the process will be dictated by the particular funding source that you're dealing with. In fact, most of the times that will probably be the case. As with the HPRP program, you'll see on the slide, again, we're referring to HUD's codification of OMB Circular A110, which is 24 CFR Part 84. And that regulation, it did require a budget revision to be placed on budget request forms. It also had a time frame. Oops, sorry, let me close that polling. I'm not sure you can see that. Okay. There is a time frame within which HUD needs to respond to that request, and if they don't respond to that request within the 30-day time frame, then they need to let you know why and let you know when you can expect a decision regarding your request. And it's really important for the program director and the other team members to be familiar and know about this process so that you can follow up on it and someone can be on top of it. What's really important with budget revisions is that, and with this process, and when we talk about having an established process for dealing with them, is that somebody in your organization, most likely the program director dealing with that program that funding is supporting, will be delegated, will be given the responsibility to oversee budget revisions. You really want to assign that responsibility in advance. You shouldn't wait until a grantee alerts you to the fact that there could be a need for a possible budget revision. You want to make sure that you're prepared for that. So there will be some instances where you might be working with a funding source that doesn't have specific requirements, such as a form that you need to use when requesting a budget revision. So on this slide, we're just giving a couple of really simple, kind of effective, or we think would be effective tips when you are trying to submit to a funding source a request for a budget revision. And that would be just to have some additional columns added to your financial report that's going to be the one supporting the budget revision. And those columns would set out what the current budget is, the new amount that you're requesting, the difference between the new amount and the current amount, and what will be left in the budget. You also might use percentages to help show how the costs are being, how the costs are flowing in your budget. With that, we're going to turn to the budget revisions that occurred with the HPRP program. There were 2 budget revisions, and we've included them as part of your samples, and I'm going to turn it over to Carrie and Jerry and Don to talk to you guys about those.
This is Carrie, and what you're looking at here on the slide is an internal working document that was generated from our accounting software, and we exported it into an Excel program in order for the program director to use it in any way he or she felt necessary for forecasting or rebudgeting. So the report that you are looking at is called a rolled-up report, in that all the drill-down items are rolled up into primary categories in which they are budgeted. So the drill-down items were also available to the program director for making decisions and entered into our decisions in completing the budget revisions 1 and forward. And in the next slide, you'll see the tracking report that was seen in the earlier webinar, in webinar 2. And as you can see on this slide, clients were accessing the homeless prevention service much more than the rapid rehousing, and most of the clients needing services were falling into the homeless prevention category. So due to this, it was necessary to move funding initially allocated for rapid rehousing services to homeless prevention. This was also required for staff time. Data collection and evaluation was not consuming as much staff time as we thought when we did the budget. The data collection staff member very rapidly learned and processed data into the HMIS system. Therefore, we had excess funds we could move to direct services. We also noticed from the drill down data that we talked about in the first slide that we were not going to need any of the legal services. Clients who had housing-related issues were working with legal services. So those funds, therefore, were available to be moved to direct service. And finally, you will note the administration was overspent by $49.09. This could not be addressed by a budget revision as the amount budgeted was the max allowed, so the agency had to cover this cost with unrestricted funds. You will see in the next slide that this slide was part of the original budget that we submitted to the state and is required to be submitted at the time of a budget revision. So immediately following from the next slide, that the revised budget numbers are reflected on this request to the state. So as you can see, data collection went from $24,500 to $12,000, and we reduced location stabilization services and increased prevention in keeping with the tracking budgets you have seen and in line with our forecast. You will notice that the overall amount of the budget did not change. And if you move on to the next slide, you'll see an example of the letter that Washington Morgan received from the state approving the budget revision request. To you, Jerry.
And so if you look at the next slide, what's important about this slide is, as Carrie mentioned, we had the letter from the state showing that budget amendment number 1 was approved. But what you're looking at here is the actual budget amendment signed by the state. So this is the formal document which shows acceptance of the revision. And what's critical about this is that this document, which is signed by the funding source, is going to be used by not only your program and finance staff, but it will also be used by your auditors and your monitors. Because the letter itself refers to an amendment, but it doesn't show the line items in the amendment. It is this signed document that will show the line items and the changes in those line items. So this is why it's very critical to have this for your auditors and monitors, as well as to internally change the numbers in your accounting software system.
This is Carrie again, and as you will see in the next slide, and as we talked about in webinar 2, that we quickly realized that we needed to do additional budget revisions. So this tracking budget is what led to the second budget revision of the HPRP program, and it does speak highly of the state that they rapidly wanted to serve clients and therefore were willing to accept and process the budget revisions rapidly. And again, on the next slide, you'll see where we had to send another letter to the state to submit our second budget request. And as with, in the next slide, you'll see as with the first budget revision, the original budget, which in this case is now the approved revision 1, had to be submitted with our request for revision 2. And in the next slide, you'll see based on our current tracking budget, we further saw the need to reduce data collection and stabilization and use those resources in the demand activity of prevention services. And on the next slide, lastly, you will see the form that the funder sent back to show that the second budget revision had gone through. You can see with this form that the amended budget is formally signed by the funding source in addition to receiving the cover letter. As stated earlier, this signed amendment is used not only for the finance and program departments, but for the monitors and the auditors. Back to you, Allison.
Great. So we want to know from everybody about the role of the finance director in this whole process for you guys. And does your CAA require its finance director to review budget revisions before they are submitted to a funding source? So if you could take a minute and let us know if that's something you guys do, that would be great.
Hello, everyone. Yes, this poll is open on that right-hand side of your screen. You do have about 20 more seconds to get answers in. A few of you have already gotten started.
Great. That's a good response to see. Looks like everybody is involving their finance director in this way in the process, and it is really important. I mean, even though the program director in many instances is in the best position to know what your budget revisions may be, what may be required for your budget revisions, it really is crucial since the finance director is the one who's good with the numbers and can ensure compliance with these requirements. Now, that doesn't mean that not everyone needs to be familiar with the requirements, but most likely in your organization, the finance director, the CFO, is going to be the one who has is going to be the most fluent in those requirements, and also, of course, be able to detect whether or not the numbers have been calculated correctly. Jerry, do you have anything to add to this?
Yes, Allison. As you know, these are building capacity webinars, and one of the best ways to build capacity within an organization is to share information. As we have all previously stated, the process works best when we work together. The finance department has to be willing to provide the information, to share the data, and to work closely with the program director to meet the needs of the programs. Allison?
Great. So as you can see from our learning objectives, we are moving right along. We have discussed in relation to budget revisions, legal requirements that might apply and how you should work with those legal requirements, and also we've taken a look at the process and how it might work for a particular funding source, in this instance the HPRP program. So now we're going to talk about no-cost extensions, and we're curious to know if any of you guys out there have ever requested a no-cost extension for a program. If you'll take a minute and let us know, that would be interesting.
All right, again, I just see that some people are getting started, but that poll is officially open on that right-hand side. You do have about 25 more seconds to get answers in. All right, the poll is closed, and your response is coming momentarily.
Oh, wow, okay. Interesting. So a lot of you guys, actually more so than I had thought, have requested no-cost extensions. So just for those of you who don't know what a no-cost extension is or have never requested it and want some more information about it, they often occur when a CAA will realize towards the end of their grant that additional time is going to be needed in order for them to fulfill their obligations that they set forth in their grant agreement. The CAA, though, believes that they will be able to meet those obligations without incurring any additional costs to the funding source. Now, that doesn't mean that they may not incur additional costs. It just means that they maybe have some other funds, unrestricted funds or other types of funds, in order to cover those different types of costs. It's really important when you are considering a no-cost extension that you understand what are the funding source requirements regarding them. So, for instance, in relation to the HPRP program, again, we look at OMB Circular A110, the codification by HUD, 24 CFR Part 84. There is some language in that in those regulations that addresses no-cost extensions for HUD programs. And it says that basically prior approval is required. If you want to have an extension, they do permit a one-time extension for up to 12 months. If the terms and conditions of the award prohibit the extension, then you'll need to get prior approval unless it's been waived. If the extension requires using additional federal funds, or if it involves expanding the project objective or proposal. So it's very important that you make sure you understand what requirements, and even if you're allowed by that funding source to have apply for a no-cost extension or to use a no-cost extension. This is a key area that if you feel like you're getting to the end of your grant and you're having trouble, or you think meeting the obligations will be difficult for whatever reason, this is where communication with the funding source is really crucial to keep them abreast of what is going on with your organization. Deciding whether or not to apply for a no-cost extension is really a team analysis. something that the whole team should get together and discuss prior to applying for one. You want to make sure that you are able to meet the obligations once you get the extension. You don't want to be granted an extension and realize that, whoa, we can't even meet it once we've got it. That won't look good in relation to that funding source. You also want to make sure when you're looking at the possibility of a no-cost extension, you want to, as a team, look at what cost may yet be incurred, that may be incurred if you continue, such as a consultant contract that may be termed. And then also you want to look at what kind of constraints will be placed on your current resources if you decide to extend the program without getting any additional funding from that source. You don't want to spread everybody too thin or your resources too thin in order to meet these obligations unless it's really important or unless there's no other way to negotiate the situation with the funding source. And then I'm going to turn it over to the Community Action Agency to talk to you about the impact, the potential impact of a no-cost extension.
This is Jerry. So in addition to the items that Allison covered, one of the really important things is to know your funding source's philosophy on no-cost extensions. When you ask the question about a no-cost extension, the answer may well be yes, but then what are the consequences of that extension? For example, if you plan to do a down payment assistance for a housing acquisition and the economy went into a downturn as it has recently done, and there are extremely tightened lending criteria, you may not be able to help a client to obtain that house. So the funding source might well understand that you were not able to do this, but then in the next round of competitive applications, this might be a rating criteria which might cost you points. So before you do a no-cost extension, also please evaluate your funding source's philosophy. Allison?
Thanks, Jerry. All right, so we are looking back at our learning objectives and to see where we are. Now we're going to move to discuss budget deficits in relation to budget revisions. I should say, and I should have said this before, and I'll say this now in relation to budget deficits, Morgan County did not face the need for a no-cost extension or a budget deficit with this particular funding scenario that we're talking about today. But we do find that community action agencies have these issues, so we thought it would be important to talk about them in relation to program budgets, and it's really important that you address these issues as a team. So how does your CAA typically address a program budget deficit? And please check all that apply. The answers are a little lengthier here than they have been in other polls. Do you pay with funds from other funding sources and then reimburse that funding source later on? Do you rely on a line of credit? Do you use unrestricted funds? Or do you just ask the current funding source to give you more money? Or do you not do any of these things? If you'll let us know, that would be great.
And yes, the poll is open and on the right side of your screen. I see a few of you getting started, and you have just a few more seconds to get in. We probably should have extended this one out a little longer with the lengthier answers, but if you are in process, it will still capture those.
All right. Well, this is good news. This is very positive results. As you can see, as everyone can see, most of you rely on unrestricted funds, and that is, as we move forward, we're going to talk about that as one of the options that is probably the safest and most conservative option, though there are some other options. And we're going to talk about a little bit about each of these options as we move along here. So when you're dealing with a budget deficit, you're basically dealing with a situation where you just don't have enough funding to cover the costs that are associated with the program. And I'm going to turn it over to the Community Action Agency to talk to you a little bit about that scenario, even though it is one that they did not face with this particular HPRP program.
This is Jerry. The CAA should have a policy, and as Allison said, it can be formal or informal, but there should be a policy on how to cover budget deficits. There's no budget that we run that's going to go down to zero without either cutting services off before the end of the period or running the budget over and covering those overruns with unrestricted funds. And the reason for that is most of us pay our staff on some time delay, so the exact amount will not be known on the final day of the program. And then we typically have 45 to 90 days for a closeout period. Generally, the closeout period for federal grants is 90 days, but many funding sources will give you 45 days so that they take 45 days to true up their numbers with the federal funding source also. So in terms of having a policy about budget deficits, the executive director should be the person to determine how much corporate money will be used for budget overruns. And so one of the ways to minimize this is to constantly analyze and forecast. Certainly, you don't want to have any surprises at the end of a budget period. And then one of the other things that it's important to understand is, as Allison mentioned in her prior discussion, some agencies may rely on a line of credit. It is very, very essential to understand that many of our grants prohibit using those grants or assets acquired with those grants where the grantor has a reversionary interest from being used for borrowing. So borrowing, therefore, should have board approval as well as a good, solid plan on how to repay those borrowed funds from unrestricted resources. Allison?
Allison, are you still with us?
Oh, sorry, I was on mute. I was talking to myself. I'm sorry you guys missed that. It was great, but I will try to repeat it now for everyone. I apologize for that. So anyway, one of the options that was in the polling question was to shift costs from other federal funding sources in order to cover a deficit. And luckily, only a few of you said that you used that option. And you must know, if you're using federal funds, that OMB Circular A-122, 2 CFR Part 230, specifically prohibits the use of federal funds to cover any type of deficiency or to avoid any kind of restrictions imposed by law or the terms of an award when you're working with different funding sources. So as Jerry pointed out, it's really important when she was talking about loans that you understand what are the specific requirements related to the funding source that you are using for your program. Now, in order to avoid there being any misunderstanding or misconception regarding how you are using your federal funds, if you do face a budget deficit, we recommend that you document that you have used unrestricted funds in order to cover those excess costs. That way, you'll be less likely to run afoul of this prohibition in OMB A-122 against using federal funds to cover the deficiencies in other programs. All right. So you can see that we are moving right along in this webinar today. We have covered every aspect that we intended to cover regarding budget revisions, the legal requirements, the process, how you might deal with the no-cost extension, what they mean, and also budget deficits. So now we're going to move on to budget reports. And we're going to talk about how budget reports are very important, especially financial reports in addition to grant reports. Now, these reports may be dictated by your particular funding source, so you want to make sure that you look at your funding source requirements again regarding grant and financial reports, and we're going to talk a little bit more as we move along about the different aspects of how to prepare a report for different audiences. But the gist of this slide is to really kind of sum up the importance of these reports. The fact that they are telling the story, especially the financial report, with relation to the money. It's showing how money has been spent and how you propose to spend it in the future. So reports can be a really vital tool to show that you are doing things right and you're moving forward as you are supposed to be with your program. So the different aspects of grant financial reports that we're going to talk about today is who prepares them, who is the audience, what are the main elements of the reports, how often will they be prepared, and what is the report format. Jerry, do you have anything to add?
Yes. One of the things that we do as agencies is we operate many, many programs. And so with that in mind, one of the tools that helps us is to have a tracking system of when reports are due, so that way we ensure that reports are not late. We use a very simple Excel spreadsheet with columns across the top for the month and the list of the reports in the left-hand column, and then a notation of whether they're monthly, quarterly, semi-annually. And then we also assign responsibility for those reports. And at the end of each month, the CFO evaluates them to make sure that there are no lapsed reports. This helps us not only to track our funding source reports for our grants, but it also helps us to ensure that all of our payroll taxes, IRS and state, and other related reports are done in a timely fashion. This works well for the finance department, and it can easily be adapted to programs for such program reports or statistical reports. Back to you, Allison.
All right. So one of the key parts of a report is determining who's going to prepare them. And as Jerry said in her prior discussion, it's great if you have this all worked out in some kind of tracking sheet so that you know who's going to be responsible for overseeing the different program requirements related to the different reports. All team members, including the executive director, will be involved in preparing both grant and financial reports. It's important to note that each team member will bring different attributes to the preparation process. The program directors, for instance, have intimate knowledge of the operations of the program and the details, and so they're going to know a lot about the specific cost related to those programs and also about the individual outcomes, whereas the planning director is going to be seeing one particular program within the context of all programs and within the context of the whole organization and putting those individual outcomes into a larger, higher level view of that reflects the scenario of the organization as a whole as to what overall outcomes, organizational outcomes, are being met pursuant to meeting these individual program outcomes. So it's very important that all team members be involved in the reporting process, in the preparation of the report. So who you prepare the report for is really going to dictate what form that report's going to take and what information is going to be in that report. As you can see here, we have on the side the different individuals who would be responsible for overseeing or reviewing a report. You can see the little person at the end there, the funding source, is in a different color because by nature of the reports, the funding source is most likely going to be on some form that the funding source is requesting you put the report on. And so it's important that you know what those requirements are. Conversely, if you're putting together a report for the board of directors, you're most likely going to be following whatever internal report procedures you have and trying to give the board of directors a more high-level view of your different programs and trying to signal for them where potential problem areas might lie. So we're curious to know, how often does your community action agency offer training for key staff and board members regarding preparing and reviewing reports? So let us know how often you guys provide or encourage these individuals to participate in training.
All right, this poll is open. We do have some answers coming in. You do have about 20 more seconds to get those answers in, and then we will be able to share.
All right. Annually is not bad at all, and that seems to be when most people provide training. None of the above or no answer is the second highest, which isn't necessarily encouraging, but what we do want to do is recommend that you do provide training to all the individuals involved in preparing and reviewing reports. If you can at least do it annually, that is great. If you can do it more often for specific groups, that is even better. We understand that training costs, so hopefully you can find some cost-effective way, maybe sending one of your staff members out for the training and have that staff member come back and train other staff members on what they've learned. The level of training that each individual will receive will really be dependent on what their responsibilities are in relation to the different reports that they're going to be involved in. So, for instance, the board members will most likely have some kind of basic financial training so that they can at least look at their reports and really understand them, and so that they can be effective tools in fulfilling their responsibilities as board members in relation to these different programs that the organization is running. When you're looking at reports that the staff are going to review, we recommend using, if you're a larger organization, you have multiple individuals within the organization that's going to be reviewing those reports, using an internal cover sheet to help track their review. And we have included here a sample from the Community Action Agency here in Boston, Action for Boston Community Development. And you can see from this sample that there's multiple aspects of contracts and reviewing contracts and reports that are involved here. This particular example has to do with contracts or proposals, but you could have one for reports as well. It talks about the program with which that contract or with which that report might be associated with, gives a little bit of description, lists the funding source, talks about the date of proposal and when the date of a proposal and when it was approved, and if it hadn't been approved, when it might be approved or will be approved, the amount of money that you're talking about, the number of staff that might be involved. And as you can see here, it has some financial information regarding match and the sources of match, if that is applicable. And we spent a good deal of time in the first webinar talking about cash flow in relation to a funding source that you might be interested in. And as you can see here under proposal and contract reviewers, we have quite a list of individuals who would be or might be involved in reviewing either reports or contracts within this organization. And it requires them to sign off and date when they've actually done that. So this is a great way to keep track of everyone who's supposed to be involved in this process. So we've tried on this slide to list what we think would be some main elements of internal reports that you might have in relation to different programs. And again, these internal reports could be just as easily dictated by the funding source requirements as your external reports may be. But here on this slide, we're just trying to give just kind of a flavor of what most reports would cover. Most reports are going to show what was budgeted for each cost, as well as what is remaining in the budget for a cost at a particular point in time. They're going to reflect the type of expenditures that are permitted. A very helpful aspect of budget reports in particular is when they provide an accurate forecast of anticipated revenues and a roadmap for appropriate spending. We understand that projecting cash flows can be difficult because, as Jerry talked about earlier on in the presentation, we're all dealing with changing economic conditions and potential swings in revenue depending on whether or not grants are coming through or if you're involved in any kind of fundraising, annual events, or pledge drives. So a key tool to use when you're forecasting is to have some kind of accounting system in place. And we spent some time both in webinars 1 and 2 talking about how important these accounting systems are, and we'll talk a little bit more about the accounting system towards the end of this webinar. So if you have that accounting system in place, it should enable you to access the general financial information that you would need to be able to do some forecasting. It's important to note that a cash forecast generally projects cash that you're going to receive and disbursements for each month. Now, they're not going to be the same for every month, so you want to look at historical financial reports. You want to look at your personal experiences. You want to see what your best guesses are regarding how that cash flow is going to go for each month. Because there are going to be variations in your cash flow, you can't just take the budget total and divide it by 12 in order to forecast what each month is going to be like. You want to make sure that you understand that, maybe in the beginning of the program you're going to be ramping up, so you might be spending more there. So when you get to the middle, revenues might be down, but you might be okay because you're going to really just be maintaining at that point, not necessarily needing a lot more money in relation to different aspects of the program. Also, what's important with internal reports is that you are tracking the goals and the outcomes that you are supposed to be achieving in relation to a particular program and funding source, and that you keep notes. Notes are so important. Not only do they note what assumptions you are basing different decisions on and are good reminders for everyone internally who is overseeing the program, but it also helps you in guiding decisions when you're looking at budgets that in some instances might be particularly high or might be particularly low. If you can refer back to your notes, then that will help you better understand, give you the whole picture of what you're looking at. So with that, I'm going to turn it over to Carrie at Washington Morgan to talk about when reports might be prepared and or reviewed.
Hi, this is Carrie. So when a report may be prepared or reviewed often also depends on the reviewer and the progression of the program. So for the HPRP program, the program director initially reviewed reports monthly for the HPRP program, but as the end of the program drew nearer, tracking budgets and reports were viewed on a weekly and a daily basis. The reports were run weekly with the appropriate drill-down detail, but the formal review process was monthly in the initial stages. It quickly became apparent to the program director that much more frequent monitoring of the reports was going to be needed, and shortly thereafter they were being reviewed on a weekly basis and then even done on a daily basis as we got to the end of the program. You, Allison.
So in addition to when a report will be reviewed, another very important aspect which we've touched on a little bit earlier is what exactly that report format will be. And again, that will be dictated by whether or not it's an internal report versus an external report, and also your funding source requirements could play a role in both internal and external report formats. What's really important with whatever format you choose, even if you're complying with a funder's format, that you make sure the information is accessible and is actually serving a purpose. It's giving out giving some idea of how the costs are flowing throughout the program. So with that, we are going to look at an example of an internal report. It's a financial report to the board, and Jerry is going to talk to you about this financial report.
So what you're looking at is a sample financial report that we provide to our board of directors. This report, as well as programmatic reports from all divisions is mailed to the board at least 1 week before each board meeting. This gives them time to analyze the detail of the reports. So the board sees where we are with every program. That way they can readily see whether we have a program that, say, for example, might be 50% of the time might be elapsed, but we might only have spent 10% of the money. So this gives them the time to evaluate that and ask us why that might be the case. And it may well be that we started a program, we were given a grant award, and we had to wait for some environmental review processes to be clear before we could actually start spending money, and that might take up to 3 months in some cases. It might also be that, for example, we're operating a program and it's off for the summer, and so, yes, certainly there should be swings in spending patterns. Now, if you go to the next slide, you will see that on the bottom of this report, we disclose to our board of directors any activity on our secured line of credit. Again, as I mentioned, borrowing is a very critical thing for organizations in ensuring that if they borrow, they have the ability to pay back any loans with unsecured revenues. So our line of credit is secured with unrestricted CDs. And the other thing that we do is we remind our board monthly of how much unrestricted cash we currently have in our checking account. Other unrestricted instruments such as CDs are reviewed by the Audit Finance Committee. And then also in addition to this, the Audit Finance Committee meets before each board meeting, and they will look at much more detail than the above snapshot that you're looking at. For example, they'll look at all the list of items that are required by the Head Start Act. And then if you go to the next section of the report, you will notice at the top of the report that we report to the board on the payment of our employee withholdings and our 401k. Not only do we put this on our report, but we attach our bank statement to the board in advance of the board meeting. This grew out of something that I was involved with some years ago. I was involved with another nonprofit organization which either would not or could not share the information with its board members on whether or not they were appropriately paying their IRS payments. And so my concern with that was that they were not, but rather that they were using this money as cash flow. So I had no choice but to get off that board. And at that point, I determined that our board members who are volunteering their time to our organization should never, ever, ever have to think about whether we are properly remitting our withholdings to the appropriate federal agencies or state agencies. And then at the bottom of the report, you'll see that we provide our board with some narrative information. For example, if we've been notified of grant awards, but we haven't actually gotten the grant agreements yet, we notify them of that. If there's a change in funding cycle, for example, in this case, the state of Ohio was changing the weatherization program, and we're putting it on a state fiscal year, not a federal, not our April 1 to March 31 year, which had been on for many years. And so the report is financial in nature, but it also provides some narrative for our board members. Allison?
Great. So it's come to my attention that some people might be having difficulty hearing me. Tashin, Andy, have you guys received any calls about that or notes about that?
I have not.
Okay. All right. Well, we'll just keep moving forward. Hopefully everyone can hear me. So on this slide, I have a strategic dashboard, and dashboards are kind of the hot, new, kind of maybe sexy way of presenting information. They really are intended to set forth information in a way that's visually stimulating. They're useful tools in that they can give an overview, a snapshot of some key indicators, not only related to financial information, but also to the program that you're running or programs that you're running. It is, though, particularly important because the space is somewhat limited with a dashboard that you and your team, if you decide to use strategic dashboards, that you spend some time up front thinking about what indicators you're going to target. You want to make sure that you are giving with that dashboard an accurate picture of your organization. And you can see once you figure out those indicators, what those will be and how those will be calculated, then you can present it in such a way that will further emphasize what the different numbers mean by color coding or with pie charts or with these kind of bar and line graphs. I will say that CAP Law does have several webinars that we had some assistance with the Nonprofit Finance Assistance Fund that talk about how you would put together dashboards and actually walk you through that process. So those are free and available on CAP Law's website. So if you're interested in working with dashboards or trying them out, I would recommend that you check out our website for some webinars on that. And here is a sample of an external report. We're using, again, the HPRP program, and it's a report to the funder. And I'm going to turn it over to Jerry and Carrie to talk about this report.
This is Jerry. So by the time you get to do your report to the funding source, this is the easiest part of what you have to do because your accounting system has tabulated all of your data. You have used that data in your tracking systems, and now you're ready to put the data on the report for the funding source. This funding source data report is prepared by the funding source, everything except the last column. So all we had to do was fill in the last column of the report. If you look at the next slide, you will actually see the numbers more clearly, and you will see how those numbers tie back to the tracking report that we have referred to on numerous occasions. All of those numbers tie back to the tracking report in the categories in which they appear here. The one item on this report that is important to point out is that when there is a timing difference between what your funding source is showing for revenue and you're showing for revenue, it's important to point out to your funding source at this point that there may be a discrepancy due to timing differences in your receiving funds that they might be showing as having been remitted to you. So the next slide is an example of what the funding source would send with the report to us so that we can reconcile cash with them. Again, as I said, at this point, you have all the information from them. You've got the information on your books. If there's a timing difference, let them know now before that becomes an issue with an auditor or a monitor where you're confirming to the state that you've received cash that you may not have received because of timing differences. And so the next report that we show you is the actual tracking report from webinar 2 that we started out with. And if you look at the numbers in the year-to-date column on that tracking report, those are the numbers that appear in the funding source report. So if you lay the reports down side by side, you will see that the tracking report is used to generate state report number 1. You'll notice the note on the bottom of the report. As you know, as agencies, we are required to affirm to our funding sources that the information that we are providing to them is reflected on the books of account. So in your reports to your funding source, the information is generated from the accounting department to the tracking reports to the finance reports that you're reporting not only to your internal users, but to your external user, in this case, the funding source. Allison?
Great, thanks, Jerry. All right, so now we're headed into the last concept that we're going to discuss in webinar 3 today, and it involves the polling question. We want to know, does your community action agency use rolled up financial reports? So take a minute and let us know. We've kind of bounced that word around a little bit in the prior slides, so let us know if you actually use them, and we're going to talk about them just a little more in depth in these last couple of slides.
All right, the poll is open. You do have about 15 more seconds or so to get those answers in. Thank you, everyone, for your participation in these, and you have officially made it to the last one, so congratulations as you get those answers in.
All right. So it looks like most people do use some kind of rolled up financial report. We're going to talk a little bit about the different kinds you can use. We have touched on each kind in this presentation so far, but we're going to just sort of speak more specifically. There are quite a few of you who don't really know what a rolled up financial report is. So basically, a rolled-up financial report is often used by larger organizations, but as you can see, as Jerry mentioned, they use it in different ways. You can use it in relation to a particular program, or you can use it as part of the overall organizational report that you might submit. So, for instance, when we were looking at those tracking budgets, you saw that the interface that we saw was basically a rolled-up program report. It hit the highlights of the main categories, and those categories, if you were with us with Webinar 1, were basically the eligible activities, those activities with which we were permitted to use the funding. Those were the allowable costs associated with that funding. So as Jerry and Carrie noted, and Dawn, what you might do at certain points, if you got that interface of a report and you noticed that maybe the money in relation to what was originally forecasted was different, then you could drill down into each of those categories and get more information. So that interface would be what would be referred to as a rolled-up program report. Now, rolled-up organizational report might be the one that we just saw that Jerry was talking about that she gives to the board to look at, where she's rolled up all the different programs into one financial report. What's important is what we've been talking about, drilling down. You want to make sure that if you do roll up your reports, whether they be program reports or overall organizational reports, that any viewer of those reports is able to then access upon request specific information. So you want to make sure you do have more detailed reports related to the individual programs that might be rolled up in the overall organizational report, or specific information related to a program that is using a rolled up report. Jerry, do you want to talk a little bit more about rolled up reports?
Yes, this is Jerry. So in our business, one of the things we don't do is we don't use standard terminology. So what we're calling a rolled-up report, somebody else may be calling a composite report. And so the answer to the poll could be both yes and no, because you could use a rolled-up report or a composite report as a snapshot of a program, and then the answer would be no because you want to look at more detail. And if you recall in Webinar 2, we used a rolled-up housing report, and then we used the components that were rolled up to make that report, so you can review both the composite or rolled-up report and then the individual components. So, for example, most of us operate CSBG programs, and so we track CSBG admin and we might track CSBG operating. So the rolled-up report would be CSBG in its entirety, and then the detail would show the breakdown of costs between CSBG administration and CSBG operating. So if somebody wanted to look at your CSBG administration, you would simply print CSBG administration, but if they want to look at your CSBG in its entirety, you would print the CSBG program. And so that's what we mean by rolling up the data into a snapshot of composite reports. They can be used not just for programs like CSBG or Head Start or HEAP, but they also can be used, as Allison said, for generating reports for the board or other program uses. The one thing that you should remember is that the information that is required to be captured by your funding sources should be available in your accounting software, and it should be available with the level of detail that you need, and then roll it up into the snapshot report for reporting purposes. Allison?
Great. So that, with rolled up reports, we have finished our learning objectives related to budget reports that we wanted to talk with you guys about today. And as you can see, we've covered all of the different areas that we hope to discuss in relation to budget revisions and budget reports. Again, as I mentioned in the beginning, we did refer to the prior two webinars, so we highly recommend that if you have questions or you are unable to participate in those initial webinars, that they are available online right now on the Partnerships website, and they will eventually be available on CapLaw's website. So we want to thank everybody for joining us. It was a tall order to sit through 3 webinars in 1 week, but a lot of you guys did it, and we really appreciate it. We really hope that you got something out of it. At this point, we'd like to answer any questions, if there are some out there in relation to this webinar or any of the other webinars. So I'm going to take a quick moment and see if anyone submitted any questions. All right, I am not seeing any questions. Cash and Andy, am I missing anything?
I think we just have a quiet bunch. I guess it's a Friday in July.
A Friday bunch, yes. That's what
it is. Just as a reminder, of course, we are recording all of these, like Allison just mentioned. If you go to communityactionpartnerships.com. There's a little button on the right-hand side for National Training Center and a whole section of webinars. The first 2 recordings are already posted there. Today's recording will probably be posted on Monday morning. And we will also make sure that we have all of the handouts available to you as well, though, of course, we have been sending them as they go along. If you do have any questions that come up after we close today's event, do go ahead and send those. You can send them to us here at the partnership. Send them directly to Andy at acruz@communityactionpartnership.com. You can also put in a request for training or technical assistance or post on the discussion board of the TNTA Resource Center at www.csbgtta.org. So with that, any closing words for this webinar series from either CapLaw or from our friends at Washington Morgan?
Well, I would just want to say one quick thing, and then maybe Washington Morgan might want to add something. I mean, of course, the real takeaway from this is the team effort that's involved, the team education, the team training, and the team knowledge. And I want to just say it was such a pleasure to work with Washington Morgan County on this project. They did this all volunteer. They helped me with all of these samples, with the substance for all of these webinars, and it makes a big difference. It's one thing to talk about pie-in-the-sky legal issues. It's another thing to really look at them in practice and talk to people who have to work with them every day. So hopefully the combination of the two was useful for everyone. And again, thanks so much, Washington Morgan, Jerry, Carrie, and Don. Thanks for all of your time and effort throughout this series.
Thank you. You're very welcome. It was our pleasure to participate, and it was a nice learning experience for all of us together.
All right, with that, I think that we can close out. So again, as Cashin said, if you have questions after the fact, please feel free to follow up, and we're more than happy to do our best to address those. Thanks, everyone.
Have a good afternoon. Thank you.